Good afternoon, everyone. My name is Roz. Thank you so much for joining me for the Done Right Bookkeeping Services weekly videos. So I appreciate you joining me. I am looking over here to my left so I can make sure that you guys are seeing me without any problems and actually hearing me. So I have another computer on over here. So bear with me for a second. Let's see. Yeah. Cool, cool, cool. All right, awesome. So I know you can see and hear me. So again, my name is Roz. I am the owner of Done Right Bookkeeping. I appreciate you guys joining me for this weekly video of tips and strategies for your small business and with bookkeeping. So today we're going to be discussing, and I actually have a presentation to share with you. We're going to be talking about owner draw and contributions. So let me go ahead and jump right into this. I'm going to share my screen with you. Let's see here. So this is basically simplifying owner drawing and contribution for small businesses. So from chaos to clarity. So this is very important to understand this, because as you're starting your small business, as you're running your small business, there's going to be times when you need to draw from your small business or contribute to your small business, definitely contributing at the beginning, right? So we want to know how to exactly do that, definitely as a small business owners. And there's some important tips that I have in here, because it really comes down to what type of small business you actually have. Okay. So, my disclaimer, we are not financial advisors or tax experts. Always consult your financial advisor or tax expert for specific information concerning your business. This screen I'm going to share with you constantly through different videos, because this really the foundation of building up, just the different reports and how you transact. Where does the transactions actually end up, in what account type, and which, is it a debit, is it a credit, and all those different things. So this is something that you absolutely need to understand as you're going through and creating transactions, because the chart of accounts, which I've done a video about that, you can check out the playlist. And I'm actually going to leave the link to the playlist, because I've added in some nice short, probably like 15 minutes or shorter type videos that explains different aspects of the bookkeeping process and what business owners need to understand. So this screen, you're going to absolutely see this again. So when I talk about the owner draw and the owner contribution, this is part of the equity account. So basically tracks claims against the company by the owners. So smaller companies owned by one person or group, equity is tracked via capital and drawing accounts. And a corporate or ownership is tracked by sale of individual shares of stock. Each stockholder owns a portion of the business. So when you think of a big corporation like Amazon, like Berkshire Hathaway, and different large scale businesses like that, corporations, they're going to fall into category under the bullet point number 3. Okay. What I'm focusing on is bullet point, and that's why I have it highlighted in red. I'm focusing on the small business owner, the one person or a small group of individuals who's running the actual company, right? And they're going to be looking at, and still based on how they actually identify or classify their business, they're going to be looking at possibly capital and drawing accounts. So What will determine if they do that? So basically, let's talk about capital for a second. Capital reflects the amount of initial money and added after startup contributed by the owner. So let's talk about like a small business that's unincorporated. Okay, this is for unincorporated small businesses based on cash and other assets by each owner is tracked in their own capital account. So Roz, what do you mean by that? So basically, a small business owner, let's say there's 2 or 3 people or partners within the small business. They're unincorporated, so they're not an S corp, they're not a C corp. They're unincorporated. Okay. Now they're contributing funds to the startup, right? At the beginning of the business, they add funds into the account, and they may be adding funds throughout the course of the business. So that's considered capital. And each individual who's running that company actually have their own capital account, because this will help simplify things, knowing exactly who contributed what and how much and when. All right. Now we're going to talk about drawing. Drawing is basically tracks any money the owner or owners takes out of the business. Okay. Still a small unincorporated business, but each owner tracks in their own drawing account. So these are called drawing account. You're drawing from the business, capital you're adding into the business. Those are the different ways. And some people ask, well, do I write myself a check? Am I considered an employee? No, this actually takes the place of you having to write yourself out a check. This is considered drawing, all right? Or if you're adding funds to the account, to the business, it's called capital. So you don't have to write out a check to yourself. This will take the place of that. So other circumstances as well is common stock. So when I refer to like the big corporations like Amazon and Berkshire Hathaway, Tesla, companies like that, reflects value of outstanding shares of stock sold to investors. So we know that these companies that I actually just mentioned, they actually are on the stock market, and they actually have stocks, and there's shareholders or investors who are actually purchasing some of those stocks. They're considered an investor. So what does this actually boils down to? So the value. So multiply the number of shares by value of each share. So let's say, for example, and this is only an example, let's say that there's a corporation that has 10,000 shares at $10 each. That will be $100,000 in value. Okay, in value. So that's how they determine that. Retained earnings. So tracks profits or losses accumulated since business opened. So the inception of the business. This is what the retained earnings actually tracks. So each end of the year, profit or loss calculated on income statement used to adjust value of account. So let's say, for example, there's a $200,000 profit. That will increase by that amount, that retained earnings account. If there's a $150,000 loss, it will be subtracted by that amount. Okay, so this is retained earnings. So that's simply it. I like to keep these videos because it's all about, bookkeeping. This is not, to some people, it's not the most exciting. To the majority of people, this is not the most exciting thing. So I like to keep it short and sharp so you'll get the gist of it and really focus on one topic at a time in these videos. So I love to leave a quote with you. Indecision will rob your bank account and your peace of mind. So be decisive in what you're looking to do to grow your business and things of that nature. All right. So if you're in need, if you're working on your own books, you definitely want to be aware of those, the equity accounts, the owner drawing, and the owner contribution. But if you're looking to delegate those tasks over to a professional bookkeeper who can do those tasks so you can focus more on growing your business and just really stepping back from this, you can actually, let me back up here. You can actually reach out to me at donerightbookkeeping.com. I have all of my information on my website. You can schedule an actual consultation. I provide free 15-minute consultation so I can learn more about your business and how I can assist you. All right. So thank you so much for joining me. I'm going to stop sharing right now. And I appreciate you guys popping in. So if you have any questions, don't hesitate to reach out to me. I will definitely see how I can assist you. So God bless, and I will see you on the next video. And if you're viewing from Facebook, go ahead and make sure you comment, you like, and follow the page. If you're viewing from LinkedIn, make sure you subscribe to our channel. Let's connect. Go ahead and like and comment. If you're viewing from YouTube, go ahead and make sure you like, comment, subscribe, and I'll see you on the next video. God bless. Bye-bye.